What is up, YouTube? It's your boy back with another video. So I wasn't able to live trade today, but I did take an $800 loss on ES. So currently the account is at 150,220. So $220 of the $9,000 profit target. So I'm going to break down that trade and then just go over what I'm going to be looking for tomorrow. So ES here, we're going to start off on the 1 hour time frame. Notice on NQ, displacement through the highs. And ES, same thing, displacement through the highs. So I just drew our Fibonacci for this price leg to go back to equilibrium, and then did the same thing on ES. And what I noticed on ES was that we had our 1 hour fair value gap sitting here. So we were just waiting for price to return back to equilibrium, because that's one of the things that price will do. Rebalance the inefficiencies, rebalance the equilibrium, generate liquidity and hunt liquidity, and we were rebalancing the equilibrium here. And to my knowledge at the time, we were rebalancing back to this fair value gap. So another reason why I think I may have jumped the gun on this trade is because we had this larger time frame SMT. So notice at the time, the 9 o'clock candle, so by open, we had taken this low, but we didn't end up taking this low until the 11 o'clock candle. So 2 hours after. So we had SMT at the time of the trade as well. So that was another confluence trying to build a narrative. What I should have left alone was right here when price closed below the fair value gap, because it technically, I've seen where price will close below and then the next candle will close right back above it. And what I was looking at was that price was just pushing up and it was creating displacement back into the range. So I said, okay, well, based on what I've seen before, this could possibly happen. We also have the SMT. So I sort of overlooked this, and I probably shouldn't have, because that's really what probably led to this loss. So, but that's part of trading and then just being transparent. So then now we're going to go down to the smaller time frame on ES. So then notice we put in the low on ES and then end up sweeping it here. So that would be our internal sell side. And then we put in another low and then sweep it again. So then what I'm waiting for is displacement back into the range. We now have created more buy side, and then we displaced through these highs, leaving this larger fair value gap, and we're now back inside the range. And to my knowledge, I'd be assuming that this would be the sell side of the curve, looking for the buy side of the curve here to take us back to these external highs. And we also had stacked equal highs here as well. So we have these relative equal highs here. And then we have these lows of buy side that were generated on the way down. So after this market structure shift, after price gave me everything that we were looking for, is when I'm like, okay, we're about to start getting busy. We got this 1 minute fair value gap. Price shot up, came back in, I entered here, and then I got clapped immediately. I think I was in the trade for 56 seconds is what it says. But that's the thing I like about my model the most, is that when I'm wrong, I'm wrong. And it lets me know immediately. It doesn't play with me. So I just really appreciate that about my trade model. It's one of the reasons why I like it so much. But yeah, so then we lost. And then so the next setup that I saw was actually on NQ. So noticing the daily profile for price, we are pushing and pushing. No room for retracement. So what I'm looking for is for price to get back to equilibrium. That's going to be where our highest probability sell is going to take place. We didn't have any SMT. Unless we did. Let's look just to make sure. This is later on in the day. So from here, there was no SMT, no. So I'm just waiting for price to retrace. We did have this fair value gap that we had created bearish. So then, as we can see, price is displacing through that. The draw on liquidity would become this low here. So I knew where the draw was, but a higher quality trade is not going to come from down here. It would come from up here. But because of the daily profile and how hard we're pushing, we have to recognize what we're trading, which is NQ, a very volatile and fast moving instrument. So if I was just to retrace back to here, two things that turn me off from this trade is that we don't have any SMT. And then the next part about this trade is, sorry. Oh, man. Okay, so the two things that turned me off about this trade was that price, after pushing down all of this way, we had this fair value gap here and here that we could have rebalanced to. So this was not where I'm looking to take a trade, because this is really, really low. And we don't want to sell low. We want to get as close to equilibrium or into a premium as we can before we take our sells. But because, you know, what we're trading and we had the draw on liquidity, this was, I would give it maybe a B. It ended up working out, but it's not a trade that I'm likely to take, or if I get it, I would just be in low size. So same model, 15-minute fair value gap. We put in the high, but then as soon as we put in the high inside of the fair value gap, we come down here and then we take these lows. Okay, so notice we put in this high inside the fair value gap. So that's our internal liquidity here. We come immediately back and take the sell side. So now the objective is met. The objective of this model inside of this range has now been met. So then, which is why we're trading on the 1 minute time frame. So it would be wrong of me to take this trade, because now once we take this objective, the model is complete. What we did end up doing was coming back to take this internal buy side, but with us being as low as we are and the objective being complete, it is not a high probability setup to take this trade. And with the objective being taken and as low as we are, it's just not a high probability setup. We do end up getting this sweep here, and then now all we need to wait for is the market structure shift, which we create an SMT right here. As I'm watching this, I'm like, okay, first displacement candle with the SMT. We understand that the draw is lower. This is where I'd want to get in. That's the aggressive entry. Market structure shift here. That's the next entry. This fair value gap. Once we retrace back to equilibrium. Because we never want to chase. And then we get tapped in right here. So what does price do? Same thing that it did here. It put in a high internal liquidity. Price comes, takes out those stop losses, and then rips. So now, and then we have the manipulation leg that swept the internal. So then when we draw the standard deviations and we pull the 2 to 2.5, look where price proceeds to go. Also, there were scaling opportunities as well. So this could be your first entry, or this one, depending on if you took the first displacement candle, or if you could have taken the inverse here once price disrespected this bullish fair value gap. We had price pulling back to an equilibrium fair value gap right here. That's your next entry. Then we have more displacement. Price comes down, doesn't take this new objective. And so then we can wait for price to come back again. And with this model, all of your fair value gaps should be respected until you take external. So we come back here, and this fair value gap is respected. And then you can scale in here again, not adding any additional risk, but adding to your reward. And then once price pushes down, then you be done with the trade. Runner to the 2 to 2.5, immediately that off of the standard deviation leg. And then that's where price decides to go, and end up actually bouncing off of it after we get here. So that's what I saw today. So there was opportunity, but it wasn't the cleanest, and I ended up, paying for it. So now we're just going to get into what we're looking for with tomorrow. So I'm going to clean up these charts. So now we have our draw. So Lee's here. On ES and NQ. Neither one is touched yet, so price could return back into one of these fair value gaps and give us the model, but we know that price wants to go lower, so I will be bearish for tomorrow. If we sweep these lows, we come back up. If we displace through, we have more generated sell side down here as well. And we'll probably take this low on NQ, but will not take it on ES, creating an SMT to possibly go back up. But that's all speculation. So depending on how the overnight session goes, if we don't take the objective, this will be the objective for tomorrow, unless I see something different. So what we can expect from price is to pull back to one of these fair value gaps here. Probably take this new price leg, retrace back to equilibrium. We already put in the high, sweep the high. So we put in the high, and you just sweep the high, and then we market structure shift back down to the objective. Those are my thoughts going in tomorrow. Thank you guys for watching, and